Good afternoon, everyone, and welcome to part two of the BTCS AMA webinar series. My name is Rob Kelly, Vice President of Investor Relations at KCSA Strategic Communications, and I'm very happy to be joined once again by Charles Allen, CEO of BTCS. This series was launched to provide shareholders and prospective investors with greater access to BTCS's management team, and we appreciate everyone who has participated in voting to help shape today's discussion. Before we begin, I'd like to briefly highlight a few key takeaways from BTCS's recently reported full year 2025 financial results. The company delivered record revenue of $16.5 million, representing over 300% year-over-year growth, driven primarily by the continued expansion of Builder Plus, block building operations, and the initial contribution from Ethereum. Builder Plus accounted for the majority of infrastructure revenue, while Ethereum generated approximately $1.3 million in revenue in its first partial year following its launch in Q3 of 2025. For today's session, our audience has voted to discuss Ethereum and DeFi, how BTCS deploys capital on-chain, including how the company participates in protocols, manages risk, and integrates decentralized finance into its broader operating model. Before we jump into questions for Charles, let me first remind everyone that statements made today may be considered forward-looking within the meaning of the Private Securities Litigation Reform Act of 1995 and applicable securities laws. Actual results may differ materially from those expressed or implied due to the risks and uncertainties described in the company's filings with the SEC, including its periodic reports and investor materials. BTCS undertakes no obligation to update forward-looking statements except as required by law. We appreciate everyone joining us today. At the conclusion of our fireside chat, we will open the floor to live Q&A. For those of you who have not yet submitted questions, please feel free to send them through the Q&A function at any point during this call. If we do not address your questions during today's sessions, you may also email them to us at btcs@kcsa.com, and we'll respond to you as soon as possible. Please note, this call is being recorded today, Tuesday, April 7th, 2026, and a replay will be available on BTCS's investor website as soon as possible following the conclusion of today's discussion. With that, I'd like to welcome Charles Allen. Charles, thank you for joining us today.
Thanks, Rob, and thank you for everyone that's taking the time to join us today. I'm excited to be able to provide more context around Ethereum and how it fits into our broader operating strategy. While BTCS, we've historically generated revenue through node ops, that's validator operations and block building through Builder Plus. Ethereum really represents a natural evolution of our model. At a high level, our focus is on generating scalable, high-margin revenue by participating directly in decentralized finance protocols in the blockchain ecosystem while maintaining a disciplined approach to risk management. We really view Ethereum, which is going to be one of our biggest focuses for 2026, as complementary to our existing infrastructure operations and really a driver of diversified revenue and margin expansion going forward. Anyway, so I look forward to discussing this in more detail and answering the questions we have.
Awesome. Thanks, Charles. So let's just get started here. As you noted, Ethereum is your decentralized finance vertical, and for some investors, this may be a newer area of focus. Can you start by briefly explaining to us how you think about DeFi more broadly, including some real-world use cases, and then maybe we can bring it back to how Ethereum fits within BTCS's overall strategy and revenue model?
So what decentralized finance really means is you're eliminating intermediaries. So if I want to exchange US dollars or USDT for Ethereum, I can do that online without an exchange involved. So it's all automatic. And most exchanges, if you just think about the NASDAQ in the stock exchange, most of the stuff is run by computers anyway. So the difference is moving to a decentralized, globally maintained computer system that is able to interact based on a set of rules and financial transactions. And that could be moving money globally. It could be operating as an exchange or an options platform. So there's all sorts of things you can do in DeFi, such as lending and borrowing. I think that's probably the easiest one for people to kind of understand is if you want to borrow against an asset. So think about if you own a home and you want to take out a home equity line against that home, you can go to the bank. You'll probably spend 4 to 8 weeks doing paperwork. They'll make sure you have title insurance and all these other things, and you can borrow capital against your home equity. Well, if you had some cryptocurrency, you could borrow against that without doing any paperwork on chain in literally a matter of minutes. And that's really remarkable when you think about all the other business models that you can disrupt when you start taking and eliminating middlemen. And I think what's really interesting, and this is kind of more high level,
Yeah.
what blockchain technology allows is really a global digital economy that you can interact with, and more importantly, is really easy for autonomous agents like AI to interact with, right? I mean, I know everybody's talking about AI these days, but when you put those two things together, you really have the foundation of how assets are going to be moved globally in the future. So it's really, the blockchain technology, DeFi is that infrastructure, and kind of coming back to how that fits into BTCS's overall strategy is we are an infrastructure player. So we have Node Ops, which is staking. We have Builder Plus, where we're block building and helping kind of get transactions on chain. And Imperium is really what we're focused on in 2026. And that's basically acting and deploying our capital into liquidity pools and other strategies that allow us to generate a high margin scalable revenue, right? So being an active participant in that ecosystem.
Okay, that's great. Maybe you can walk through how Imperium actually works for you in practice. So how does BTCS deploy capital on chain? What types of assets are you using? And what specific DeFi activities are currently driving your revenue? It'd be helpful to understand how this translates from a sort of a concept strategy into your day-to-day operations.
And okay, that's a I think I'll start with the easiest way of
Yep.
thinking about that. So in 2025, the majority of our Imperium activity was really posting our asset, right? Depositing Ethereum into Aave as and contributing that to the pool, right? So we were basically a liquidity provider of Ethereum, and for that we would receive additional ETH as consideration for putting that liquidity.
Right.
That's relatively, very low margin and not the most efficient way to do it, but we're able to borrow against that and lever up. What's much more interesting is saying, okay, well, look, Aave is a lending and borrowing platform. That's one aspect of DeFi. There's liquidity pools and there's all sorts of other strategies that we can play in, where we can deploy to, like Uniswap v3, Uniswap v4, where we can put liquidity in both in bands and then actively rebalance that and have a whole strategy around that, which is substantially um, can generate substantially more revenue for capital deployed than you could do in other strategies. And so that's where it kind of gets relatively sophisticated in the strategies. I'm not going to get into too much details as to what we're doing, right? That's a little bit of our moat, especially in the public markets. But it's really exciting, and I hope the that and we're pretty optimistic that that will translate into strong financial results for 2026.
Okay, makes sense. You mentioned Aave briefly there. So you've talked about this as being an important part of your DeFi strategy. How do you evaluate which protocols that you do participate in, and what criteria are you using to assess the risk, the reliability, and the revenue potential? And more broadly, how do you think about protocol selection as Imperium continues to scale?
So we'll look at all sorts of protocols. In terms of risk, counterparty risk is a big one. I tend to take that one probably, most seriously. We've
Yep.
seen many organizations blow up over time where it's really are people involved. When you get into DeFi, now you have protocol risk. And so when you look at protocol risk, do you want to, if you're doing lending and borrowing, obviously a great choice. It's kind of battle tested, been around for years and years. Do you want to go some startup that recently launched and their code isn't audited, they don't have SOC 2 reports, like probably not. That would be unreasonable protocol risk. So that's something we balance. We also balance like, well, how much revenue can we generate with this strategy, and how good is the margin going to be? So I would think what we're doing in Aave, which was 2025 primarily, is not optimized. The strategies we're looking at and implementing today are substantially more advanced, and we believe will drive much more revenue and higher margin revenue, right? There's obviously we can't provide any guarantees or assurances we'll be successful in that endeavor, but that is the goal.
Yeah, that makes sense. Um, I mean, you just touched on this now, but from an investor perspective, how should we think about the margins and the potential growth of Imperium relative to your other business lines? How do you prioritize the capital that you're deploying across these segments to ensure sort of consistent and strong long-term growth?
That's a balancing act we talk about internally, very often. If you look at the three models we have, node ops, which is staking, that's something that's you're kind of capped. The lowest revenue potential for capital deployed is if you have someone else do it for you, right? If you go to a Figment, a Block Daemon, a Galaxy, and say, "Hey, here's my ETH, stake it," that's like the worst way you can do it. The next best is run it yourself, and the next best is, which gets more complicated, both from a technical and accounting perspective, is like, "Hey, let's use a liquid staking pool like Rocket Pool." Where we can maximize our earnings. And so that's kind of why we focus there. It's much more complex. Um, that's in the node ops. That's definitely, if I could put all of these in buckets, node ops is high margin but needs a lot of capital to scale. Block building is um, scalable but low margin, and Imperium is highly scalable and we believe will be very high margin. So that's why Imperium is really our focus for 2026 is, hey, we don't want to be thought of as a proxy for holding ETH, right? Like it doesn't make sense. It's not what the business is. We've been, an operating company since 2021 focused on, Ethereum. So I think coming back to your question of, how do we prioritize, we're really looking at 2026 to be, higher margin.
Okay. Um, the last one for me before we get into some of the questions that we've received. Other public Ethereum-focused companies rely heavily on ETH staking, as we've already talked about, which generates roughly 3% annually. Do you believe companies that depend solely on staking are limiting their growth potential? Why is BTCS better positioned operationally compared to your peers?
Um, I think they're limiting their growth potential, but it depends on their strategy. If their plan is let's buy ETH and hope it goes up and we'll get 3% return in ETH per year, maybe that could be a little bit higher if they did it themselves or they outsource it, which starts to matter when you're talking billions. That's not a great strategy. In the market, there's going to be institutions that will put on a pair trade, right? If that's all you do, you're not leveraged, you don't have any other operating strategy, you're a one for one ETH with staking, they'll just discount, maybe they give you a little bit of a premium to that of where it would look. They can look where the stock trades and simply, if you're above book, sell your stock and buy an ETF and there's zero risk.
Yeah.
Um, and reverse the trade in the opposite scenario. So it really leaves you kind of pigeonholed in terms of your strategy. So why aren't other companies expanding out into doing other things? I think what happened was last summer you had just a flood of companies piling into zombie NASDAQ companies that had no operations that were on the verge of getting delisted, or whether they're in the biotech space or some other ancillary business line. And what's happened is now you have a a company that's not ready to be as big as it is in terms of disclosure requirements, accounting requirements. We've seen a bunch of these companies have challenges with their reporting, and so they're all coming up the learning curve on what should our how do you even operate in the public markets? Because a lot of them have never done it before in the cryptocurrency space, which is very different than having, public company experience. And then how do you build a business in that and audit for it? Like, how do you come up with a new strategy now that investors have basically figured out how to, pin you back to NAV or below? And so I think we've got, when it comes to our strategy, we have a very strong lead,
Yep.
which is something we've had for years, right? We didn't pivot into this last summer. We've been in this space, I guess, since 2014 is when we went public, and we've been kind of focused on blockchain infrastructure and Ethereum since 2020. So from that perspective, I think we're really well positioned to execute on the strategy and have a long lead, especially with respect to other public companies.
Great. Well, it looks like we've received a few additional questions here from the audience. And as a reminder, if you would like to submit a question, you can do so now through the Q&A function. Just taking a look here at our first one from Dylan. Given BTCS's 305% year-over-year revenue growth and your stated ambition to scale staking and digital asset AUM, how do you think the market should value BTCS over the next 3 to 5 years? Specifically, can you walk us through how you benchmark yourselves against private staking leaders like Figment and Blockdaemon, and what concrete milestones and then AUM, revenue mix, margin, or institutional relationships you believe are necessary for BTCS to command similar revenue or cash flow multiples in the public markets? But I'll,
Um, Yeah, that's a lot of a question. I know we have
yep,
another from the audience
yeah,
as well, which is similar. So I'll try to answer both of those at once. I mean, one, we have zero control or very limited control over our stock price. All we can do is get the word out of what our company is doing and hope people find it interesting and view it as undervalued or, fairly valued and want to uh, become shareholders, right? If that happens, hopefully, the stock goes up and we create shareholder value. But obviously, we can't provide any guarantees or assurances on that. In terms of, benchmarking ourselves against staking companies, we don't really. We're not really a staking company that would, compete against a Figment or a Blockdaemon. And for those not familiar, Figment and Blockdaemon are primarily institutional, and Figment more retail as well, staking providers where you can come and give them your capital and they'll stake it. They can do it in a custodial way or non-custodial. It's basically staking as a service. It's something we looked at in 2021 due to the regulatory environment. We kind of only did it non-custodial and everybody else was doing it custodial, and it wasn't a business we could really catch up. And more importantly, looking at it now, it's a commodity business and people are just getting squeezed on fees. So it's not a business I'd even want to be in today. So we don't really benchmark ourselves against those companies. They're completely different. The staking we do is for our own account, not other people's capital. We don't have a front end infrastructure to allow people to sign up and do this. And it would really be a distraction based on where we're focused for Imperium. So in terms of milestones, I guess that takes care of the, benchmarking.
yeah,
With respect to milestones for 2026, we had one, that was really along the gross profit targets. Could those materialize? I mean, one thing we don't do is we don't put out forward guidance. It's, for a company our size, based on the volatility in the space, it's very risky. We've been advised not to do that. One thing we do is we do make public the management targets. 100% of management compensation is tied to performance-based targets. And that you can think of as, a framework as to what's potential. Are they doable? I think we had, I don't recall off the top of my head, it was like an 8 or 9 million target for revenue this year, which we blew out of the water. Um, our goal for 2026, which we revised to try to align with shareholder interests, is something we were thinking about in 2027. And then based on market conditions and where we're focused, we brought it in and said, hey, let's do this in 2026 is let's obviously we care about the top line. So that's 25% of management goals, but we really want to start, driving gross profit. And I think that's a great measurement compared to like net income because you don't have all these other funky accounting things of like Black-Scholes on options. But with gross profit, I mean, we basically set a target of 6 million, which would be 3 times what we did in 2025. So we did about 2 million in gross profit in 2025, and we're saying, hey, management's target 6 million in 2026. And what I would like to do is, I mean, we have that, the payout kind of for management and the team that are helping, basically building the company for shareholders and their shareholders as well. That target ends at I think 12 million. So,
right.
if we could get to those numbers, that's phenomenal. And so that is one of our goals for 2026 is let's start um, driving, that gross profit. What that translate into in terms of market valuation, multiples, we'll see, right? That's really hard to say.
Yep. No, fair enough. Well, I believe that's all the questions that we have received. I want to thank you again, Charles, and thank our investors and participants for tuning in. As a reminder, a replay of the chat will be available under the investor relations section of BTS's website and will also be posted to our social channels. That typically gets posted within 24 to 48 hours. And please feel free to contact btcs@kcsa.com if you have any further questions that we were not able to answer today. And otherwise, thank you, and until next time.